Our last speaker of the morning session is Victor Rajasuriya, Managing Director and CEO of Panoramic Resources. Victor is a mining engineer with more than 25 years operational and technical experience in multiple disciplines across both underground and open pit operations. He's an engineer from the WA School of Mines and is a member of the Australian Institute of Mining and Metallurgy and the Australian Institute of Company Directors.
Thanks, Katie. Good afternoon, everyone, and I'll get to the presentation straight away. I know it's lunchtime, and I'm standing between you and lunch. I'm sure you're hungry, but I'm hoping that you're also hungrier for a great story. So the picture on the screen is the picture of our Savannah mine. The project itself, at the moment, it's ramping up. We mine nickel, copper, and cobalt. It's a sulfide mine, and it's part of the critical materials that the world is currently chasing for. I will skip through the usual disclaimers. Last year, I talked about the nickel space, and I thought I'll start off with what the nickel space looks like at the moment. And when you look at Australian assets that are currently listed in the ASX and producing from Australian assets, there's only 3 nickel companies, right? When you look deeper, there's only one pure play, and that's Panoramic. And our market cap is about $120 million. You look back, and then there's the bigger guys like IGO and BHP. And over the years, they've also been focusing on nickel and expanding. Then you look at the consolidation space. You could see that Wyloo recently finished a deal with Minco. Then Wyloo and BHP went toe-to-toe over Norant. And then BHP ended up taking over OZ Minerals, which had a large undeveloped nickel project as part of that portfolio as well. And then IGO also took over Western Areas, and in that process, they also became our largest shareholder at 21% at that time. We then see the end users who have been working with the miners to try and lock in supply. And we have BHP and Vale doing deals with Ford and Tesla. We, on the other hand, sell our concentrate to Trafigura, who are our offtake partners, and they are a commodity trader. And they, in turn, work with the other end users. And what we are seeing at the moment is these guys are chasing Australian nickel concentrate, which is smaller in carbon footprint. And given the IRA agreement in the USA and the free trade agreement with Australia and the US, I think we are going to see more of that flowing our way as well. So last year, when I started this presentation, I wanted to get people's attention, and I referenced the Game of Thrones. And it was like the battle for the nickel throne in WA. And given all these changes, I thought I'll start off again with that so that you could park your hunger and concentrate on the story. And and I thought this way you get to see who the 4 kingdom holders are and how big they are and what they are all about. So to start off with, we have BHP, Jessica Farrell, still the queen, feared by everyone in the land. They are very bullish on nickel, and recently Jessica gave a presentation where they were speaking about there's going to be 400 million light vehicles that's going to be driving around the world, and currently there's about 20 million light vehicles floating around. This is electric light vehicles, sorry. And most of them are going to have nickel in it, right? So I think the Lannisters know best, and we just have to catch up with what their thought process is. Then we have a new entrant in Luca, the whisperer to the king in Andrew Forrest. He's now big into nickel. He's growing a portfolio. Not far from here, he took over an asset in Kambalda, and they've gone as far as in Canada, and they are looking for generations ahead. Every time you speak to Luca, it's about looking at generations ahead. So they are looking long-term for sure. Then we look at IGO. There's Matt Ducey. He's currently waiting for his new boss to arrive, which makes him a loyal companion. But I have to say, Matt's in the bad books with me, because I went through a battle recently and he wasn't there to support me. But it's all in good form. And then there is the battling hero in the north, right? And you guessed it, I'm back again this year, ready for a good battle next year, as in financial 24. But I have to say, we've had a pretty tough quarter. And I do feel bruised, and I'm still getting there. And more than likely, I look like this right now. But it's good to go. I'm good for a nice, good battle, just as the calendar year or the financial year starts for us. So let me now take you through what we bring from our Northern Kingdom. So we are located in the Kimberley region of Western Australia. Our tenement package is if you have a look at the tenant package on the second picture, the green bits are the ultramafics that are highly prospective for mineralization, and that's what we are targeting. The Savannah mine is right in the middle of that complex, and that's where to date we've been concentrating on. And the package is surrounded by IGO in all directions. The third picture to the right is the mine. So under the open pit is the old mine called the Savannah mine. That was mined for 12 years. And then the Savannah North mine is to the right. That's a new mine that we're opening up, and that's ramping up at the moment and producing what we need. The mining itself is being carried out by Barminco, the specialist underground mining contractors. The processing of the ore is very simple. It's a crushing, grinding, flotation circuit. We make a bulk concentrate, which has got nickel, copper, and cobalt, and then it's shipped to Wyndham and then sold to Trafigura. But more importantly, it's a 12-year mine life. Once fully ramped up, we will be producing over 9,000 tons of 9,000 tons of nickel and over 5,000 tons of copper. The all-in cost is going to be about $9 a pound, and currently the price is sitting at about just under $15 a pound, so certainly a good margin. I talked about our battles that I've had, and these are the setbacks we saw last quarter. The first one was a one-off rain event that happened in the Kimberley region. It washed out the bridge that we use for our logistics route to bring our consumables and parts to site. The bridge got washed out. And so the government built a temporary bridge that we are using at the moment, and there's a permanent bridge that's being built. But during that time, we did lose momentum and our productivity dropped off. And then early in June, our filter press head plate failed. So what that means is you couldn't make concentrate, so our revenue wasn't coming through. And because part of the processing plant, we also make paste to put underground, so we couldn't run the processing plant, so we didn't put paste underground, which meant that the productivity from the mine certainly slowed down. So that certainly had a revenue impact. We missed a shipment, and it cost us just over $20 million in the end. A new head plate was put together for the filter press by the 9th of July, and it's been working nonstop since then. So given that we had the revenue issue, we had to strengthen our balance sheet, and we ended up raising $40 million in the last 2 weeks. It was it was fully underwritten. There's $40 million that came through the door. And there's currently a share purchase plan that's also open, raising up to $5 million. The raising that we had to do was steeply discounted. I have to say it was done at 5 cents with a 1 for 2 free option at 7.5 cents. And the reason it was steeply discounted was because our largest shareholder couldn't participate in the raising, given they had some issues themselves, so hence a deep discount. What we plan to do with the raising now is it gives us a stronger balance sheet. We've worked through our setbacks, and now we set us up on a very strong footing for the future. As part of the capital raising, we also had a debt facility with Trafigura, our offtake partners, that was due at the end of December this year. So we ended up getting an extension on that, so that's now due at the end of December 24. And in return, we gave them a 2-year additional option on the offtake. The offtake is pretty good. It's on the same terms. The terms are very good for us. So it's one of the best terms that the company's ever done, and we are quite happy for them to be part of this. So looking at the short term that's in front of us, FY24, we are going to be mining just around 7,200 tons of nickel and about 4,500 tons of copper. The C1 cost is going to be somewhere between $10 to $11.25 a pound. And more importantly, when you look at it, you look at FY23 production numbers and then the FY24 numbers, and you go, they seemed quite high of what we are forecasting. But the main reason is the Savannah North mine that's just ramping up. It's opened up in about 4 different levels now. And so the production is coming from various areas, and we are able to bring more volume through the processing plant. And there's a new area called the Savannah Extension, which I'll touch on, under the historical workings of Savannah, which is going to come into production later this month. So it's another source of ore supply for us. But, you know, I'm an engineer, so you look at how the site's going all the time. And since the filter press was repaired or fixed on the 9th of July, we've had a good run rate. So we were targeting on average this year 73,000 tons of ore a month. And the last 30 days, we hit 70,000 tons of ore per month. So it's actually a good start. More importantly, the grade has been much better than we anticipated, and it's certainly helping the whole project. I think we're on to a good start for this financial year. Looking long term, this is, as I mentioned, it's a 12-year mine plan. It's going to be producing over 9,400 tons of nickel, 5,000 tons of copper. If you look at the graph, you see that FY24 and FY25, the cost is slightly higher, and then it ramps down. This is the black line. And the reason for that is that the first 2 years, it's all about setting the mine up for the future, right? So you're spending more capital development. There's one-off projects that cost a bit of money. And then in FY26, it switches to a production mine where the costs do drop off, and it becomes strictly more a production type mine. When you look at the financials for the project, they are very attractive. So if you use base case pricing or consensus pricing, you're looking at over $1 billion in cash flow with an NPV of anywhere between $530 million to $670 million, and that is post-tax. So it's certainly, from a small project in WA, we are certainly able to generate a lot of cash from this mine. Now, switching to exploration. The key takeaways from this is on the right-hand side bars. So between resource and reserve conversion, at the moment, we've only converted 55% of the resource into reserves. And the whole thing is, in a normal WA mine, the reserve to resource conversion is about 80%. So we are in the process of converting more of that into reserves. So at the moment, the red bits are the reserves that we are planning to mine, and the yellow bits are areas that have to be drilled and converted. So over time, we'll put some drill cuddies in, the geologists get the chance to drill through, and more than likely, we'll add more into the life of mine. Last year, we spent a whole year drilling around the areas that we are going to be mining this year, just to make sure that the resources there, the tons are there, and the grades are there. And pleasingly, all of that ticked the boxes. So this year, I think we are pretty much sure of what's in front of us, and we'll just evolve from there. I'm going to switch to Savannah itself. So the Savannah mine started in 2004 as an open pit, and then it went underground. That's the picture to the right-hand side. The mine then finished in 2016 when the nickel price was down and when the geologists believed that the ore body had pinched out. Our new geology management group, led by our geology manager, Andy Shaw-Stewart, he came in and said, listen, let's try and drill under the Savannah mine. I think there might be some continuation, and sure enough, within months, they came up with some really good hits. We are talking about, the width is between 9 meters to 30 meters, grades of 1.2 to 3% nickel. Keep in mind the life of mine grade is 1.2% nickel. So we didn't even wait too long. We put the jumbos in there straight away. That area has now been developed, and that's the area that's called Savannah Extension that's coming into production next month. As all geologists go, they then come and knock on the door and say, listen, I think there's more below the 900 fault. Give us some money. Let's go and drill that area. So we gave them funds to drill 2 downhole EM holes, and what they ended up doing was, the plan was to drill these holes and then figure out where the ore body is switching towards. So, they were not supposed to hit ore. The first hole actually hit massive sulfides, and we ended up finding 3 different lenses. So the plan is to try and understand that better. We gave the data set to New Exco, our geophysics consultants. They went through the database or the data, and they modeled a couple of downhole EM plates with some really strong footprints. And they are the holes that we are currently drilling at the moment. And hopefully in September, we'll have a couple more, we'll have some more knowledge of what's under the Savannah mine. But I wouldn't be surprised if Savannah just keeps on going. On the sustainability side, we are very keenly involved in the local community. Our plan is to tap into the young minds of the kids in that local community. So we sponsor the Teach, Learn, Grow program. We've done that for 3 years, and we're getting some really good positive feedback. We're focusing on local employment. So when COVID happened, most of the local community just locked in, and it's only now they're actually coming out. So we are seeing people entering our port. They're working in the Wyndham port, in the processing plant, and also in the transport route of transporting corn to the Wyndham port. We paid over the last, since 2004, we paid out about 17 million in royalties to these local communities, and we think we'll double that in the next 12 years. So I'm running out of time. I'll circle back to our value proposition. There's a safe ramp up going up at Savannah. We've got all the people, we've got all the equipment, and our balance sheet is now strong, and it's been strengthened. Attractive financials from a very small mine in WA. It's a nickel sulfide mine. Nickel sulfides are like hen's teeth to find. And very good financial returns, and the exploration potential is phenomenal. If you listen to the opening speaker for Diggers, Dr. Linda Yu, on Monday, she was actually saying that the commodity prices could go up 600%, and wouldn't that be great for us? On that note, thank you.
Thank you, Victor. Great presentation. That concludes our morning session, so we'll now take a break for lunch, and we'll be back in about an hour time.